Are you feeling overwhelmed by the constant fluctuations in mortgage rates? You're not alone, especially if you are considering buying a home in 2025. The mortgage market has been on a wild ride lately, leaving many potential homebuyers wondering if they should wait for rates to drop or take the plunge now. Let's dive into what you need to know about mortgage rates in 2025 to help you make an informed decision. First up, rates are stabilizing, but don't expect a dramatic drop anytime soon. After the roller coaster we experienced last year, experts are predicting that rates will settle in the mid to high 6% range for the remainder of this year. While this might not be the sudden decrease you were hoping for, it's a sign that the market is finding its footing. The good news? The worst of the rate spikes seems to be behind us. Why? Lenders want to ensure they're compensated for the reduced purchasing power of future payments. Strong job reports, impressive GDP growth, and high consumer confidence can all push rates upward. On the flip side, signs of an economic slowdown can bring rates down. Lenders and investors are constantly analyzing these economic indicators to gauge the overall health of the economy and adjust their rates accordingly. When the value of money is expected to decrease over time due to inflation, lenders adjust their rates accordingly. When these yields rise, mortgage rates tend to follow. This relationship is so strong that many financial experts keep a close eye on Treasury yields as a predictor of where mortgage rates might be heading. Sellers may be more willing to offer concessions to get their homes sold, especially if the property has been on the market for a while. And for buyers, it is a way to offset the impact of higher rates without having to wait for a market shift that may or may not come. Now, let's talk about inventory. The housing supply remains tight, which means competition for homes is still fierce in many neighborhoods. Say you're looking at a $300,000 home with a 30-year fixed mortgage at 6.5%. The Fed's decisions are typically made in response to broader economic factors like inflation and overall economic growth. Every situation is unique, and what works for one buyer might not be the best strategy for another. It's about finding a place where you can build your life, create memories, and potentially build long-term wealth through homeownership. The right time to buy is when it makes sense for you, and with the right approach, you can make that happen regardless of where rates stand at any given moment. By staying informed about market trends, understanding what influences rates, and exploring creative strategies like seller concessions, you'll be well equipped to make a decision that aligns with your financial goals and personal aspirations. That is why it is crucial to work with experienced professionals who can guide you through the process and help you make the best decision for your circumstances. This can make your monthly payment more affordable, sometimes by hundreds of dollars each month, without having to wait for market conditions to change. This is a crucial factor to consider in your decision-making process. Here's how it works. During your negotiations with the seller, you can ask them to contribute towards your closing costs. You can then use these funds to buy down your mortgage rate. Geopolitical tensions, international financial crises, or major world events can cause uncertainty in the markets. When this happens, investors often seek safe havens for their money, which can impact U.S. mortgage rates. If you decide to buy now and rates happen to fall in the future, you can always refinance to lower your monthly payment. The key is to secure a home you love now, then keep an eye out for opportunities to improve your rate later. This strategy allows you to get into the market without trying to time it perfectly. Waiting for a significant rate drop could mean missing out on your dream home. Remember, you're not just competing against the market. You are competing against other eager buyers who might snatch up that perfect property while you are waiting for rates to fall. Here's a silver lining to consider. Refinancing is always an option down the road, but what actually influences these mortgage rates we're all watching so closely? Let's break it down. One major player is the Federal Reserve. When the Fed adjusts its benchmark interest rate, mortgage rates often follow suit, though not always in a direct, one-to-one relationship. Speaking of inflation, it's another crucial factor in determining mortgage rates. Generally, higher inflation leads to higher mortgage rates. Economic data also plays a significant role in shaping mortgage rates. The bond market, particularly the yield on 10-year U.S. Treasury bonds, is closely tied to mortgage rates. Lastly, don't underestimate the impact of global events on your mortgage rate. Now that we've covered what influences rates, let's talk about a strategy that could help you secure a lower rate, even in today's market: seller concessions and rate buy-downs. This is a tactic I love to share with buyers because it can make a significant difference in your monthly payments. A rate buy-down means you pay an upfront fee to secure a lower interest rate on your loan. This approach is particularly useful in the current market environment. Of course, the exact numbers will depend on your specific situation, the current rates, and how much the seller is willing to contribute. But it's a strategy worth considering and discussing with your real estate agent and lender. By understanding how rates work and exploring strategies like seller concessions and rate buy downs, you can make a more informed decision about when and how to enter the housing market. Remember, the goal isn't just to get the lowest rate possible at ease to secure a home you love at a monthly payment you can afford. As you navigate the complexities of mortgage rates and home buying in 2025, keep in mind that the perfect time to buy is when it makes sense for your personal financial situation and life goals. Don't let the constant chatter about rates paralyze you into inaction. Instead, arm yourself with knowledge, explore all your options, and be ready to act when the right opportunity presents itself. If you are curious about how a rate buy down could work for your specific budget and home buying goals, don't hesitate to reach out. In the end, remember that buying a home is about more than just securing the lowest possible interest rate. So, whether you decide to buy now or wait for potential rate changes, make sure your decision is based on a comprehensive understanding of the market and your own needs.